Meta making headlines with the announcement of its first ever dividend. The news, along with the company's strong earnings and guidance, sending shares soaring toward a record high in today's trade. Meta is now on track to add $200 billion to its market cap. That would be the biggest single-day addition for any company on record. So why did this dividend announcement hype up investors so much? Let's take a step back and cover the basics. What is a dividend is the first thing we want to talk about. It's a regular payment made by a company to the folks who own the stock. Meta's dividend is going to be paid quarterly at 50 cents a share. It's considered a vote of confidence from CEO Mark Zuckerberg, and he's set to be himself the biggest beneficiary.
Owns a lot of shares, and he holds roughly 350 million shares of Meta, so his payout is about $175 million each quarter. That's before taxes, and that's about $700 million every single year, assuming that dividend stays the same. This move is also notable because big tech doesn't necessarily do dividends, and this has been the case throughout history, although some of the bigger ones, they do end up doing that. Companies with extra cash generally have three options of what they can do with it. Number one, they can reinvest it in the business, doing research and development, buying equipment or factories, hiring new workers. Number two, they can make an acquisition or acquisitions. Three, they can pay out some of that cash to shareholders, either as a dividend or by buying back their shares, which reduces the number of shares outstanding and it boosts the value for the existing shareholders. It's basically an extra reward for owning the stock. And Julie, we were talking about not only is there a dividend here, it's a $50 billion buyback announcement, but that's not the first $50 billion announcement that they've done before. No. They actually did one 2 years ago in 2021.
Yeah, it was sort of the 1-2 punch of that with the dividend that really caused so much enthusiasm. But in fact, only 3 of the Magnificent 7 stocks pay out dividends right now. Most of them have historically chosen options 1 and 2. Either they spend their cash on the business or to buy other businesses, or in the case of Apple, they also just have a lot of cash left over that sits around. But Meta's move does send a message. That's what these are sort of designed to do. The company has enough cash that it's confident it can both invest in the future and share profits with shareholders, and also maybe that it's not going to be making big acquisitions. Maybe it's a signal of that as well.
Well, and they'd be under the radar for that anyway, but not to say that they wouldn't do it.
Right.
But the traditional way tech has rewarded shareholders is through share buybacks. Meta is authorizing another $50 billion buyback last night. And yes, that is a huge headline number, as we've been talking about. Nowhere near the biggest ever tech has seen, though. Apple holds the crown for that, top 5 buybacks authorized. So all 5 of the top ones are Apple. You go all the way up to $100 billion. That is substantial. That's a cash problem.
Yes, and that, indeed, that, Apple is known for having a lot of cash, and it's known for spending a lot of cash as well for that particular usage.